Alright, so as of today, C3ai is up a whopping 25%. So in today's video, we are going to be talking about what on earth is going on with this company and answering that main question of should you buy this stock? So I hope you guys all enjoy it. If you have any questions, by all means, ask them down below. And if you guys get anything in value, hit that like button, subscribe, because it really helps me out when you guys do that. So guys, let's jump into it. So for those of you that don't know what C3ai is, C3ai is a artificial intelligence company that is highly invested into AI. And what we've seen over the past year with this company is a ton of volatility. The stock is squeezed up, but it's also gotten absolutely obliterated, selling off 20% at times. And the reason why we've seen so much volatility, one, is because the company has claimed to possibly falsify some income statements. Anytime you have that announcement, you're gonna have people sell. You never want to invest in a company that it could be possibly faking some of their income that's highly illegal, and there's been talks of doing an audit and a whole bunch of other stuff like that. But not to mention, another reason why we've seen a ton of volatility is because AI right now is absolutely popping. We've seen companies like ChatGPT be the fastest online site to hit 100 million users, outpacing Facebook, outpacing Instagram, YouTube, and any social media platform. ChatGPT is outpacing right now. So with that being said, a lot of people are thinking that this is the next growing sector to invest into. So a lot of money has been really getting flooded into AI. We've seen companies like Microsoft, Google, Big Bear, and obviously C3 get flooded with money. But as of today, this stock is up a whopping 25% because they announced some earnings. Now these earnings absolutely beat expectations. So anytime you have a beat earnings and a beat guidance, you're gonna have buying pressure. You're gonna have people hop back into the stock because they think it could be the next stock that's worth $100 million. Most people are looking for that next Apple, that next Tesla, that next Amazon, that next Google. So when you see a company beat earnings, a lot of people think that this stock could be that next move. So is it? Well, looking at some of the fundamentals, let me just say this. Their fundamentals are good, but not great, right? Looking at some of them, yes, we've seen some decline on the revenue. We've seen a decline on a couple of other fundamentals, and it's just not the greatest. So for me, answering that question, Carter, should I invest into this company? So for me, I think that this is a high growth stock. So what that means is it's going to be highly volatile. This stock's going to go up and down at rapid rates, right? It's also going to be a high risk, high reward play. This company very well could be the next Google, and it could skyrocket up, and you could make a ton of money off it. But on the flip side, this company could easily sell off, just like we've seen in the past. I think a good strategy, one, would be to dollar cost average. Dollar cost averaging is a great way to invest into these growth stocks and these high volatile stocks, because instead of investing one lump sum of money, and you could be investing overvalued, or hopefully you buy it undervalued, but anyways, you could be investing into this thing overvalued, especially that it's already up 25%. So investing, dollar cost averaging is investing just consistently. So instead of putting up a one lump sum of cash, you invest weekly. So what this does is it gets a good average price for the shares. So if this stock continues to go up, that's great because you have shares to make some money. But if this thing sells off, that's even better, because once the stock rebounds, your average cost is so low that you make a lot more money because your average price is lower. So it's a great way to invest into these growth stocks. Keep this thing, that I would recommend under 2 to 3% of your portfolio. Don't go super heavy into this thing just because of the growth and volatility. But overall, guys, for me, I have some shares. I think that this company could be the next, the next Google or Microsoft. I think it's unlikely. I think it's a very risky company, but I think it's just worth taking a position in. And the money that I invested, is well under 2% of my portfolio. And if I lose this money, it's only 2%, so it's not much. And if this thing skyrockets up, one, I always can buy more. Two, I have shares to make money. It's a great way to invest into these growth stocks, guys. I hope you guys all enjoyed the video. If you guys did, hit that like button, subscribe, and we will see you guys tomorrow in another episode. Take care, everyone, and peace out. Bye.